Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday, and it's August 31st, and this will be our chart lesson for today. Couple of things real quickly. Monday is Labor Day, and that's a holiday, so no trading on Monday. I think they trade till noon, but don't try to trade that stuff. You'll just probably get trapped in a trade, and I mean, every now and then you get a little bit of movement, but generally you want to just take those days off. So I always take them off. I don't try to attempt to trade them. It's not worth it. I've had more heartburn trying to trade those days than any success. So I always take those holidays off. You need to take time off. I know a lot, especially if you're new. You feel like I got to trade, and if you feel that way, you're probably over trading anyway. So you need to take those breaks. Take Monday off if you want to sit in there and just get some sim trading experience and watch the screen, nothing wrong with that, but don't try to trade it live. Definitely don't try to trade it live. So also tomorrow morning, I may not do a mid-morning report. I'm going to take off early regardless, so I may come in just for an hour or so tomorrow and trade for an hour or two, and then do the mid-morning report, and then probably cut out of here. But if you don't see a mid-morning report, you'll know why. Because I just took the whole day off. Because I may just take a long weekend. I've got a project going. I'm building a 40 by 80 uh, pole barn shop or whatever. I've got to have a shop. I'm almost retired and I still don't have a shop, and I've got nowhere to put all my equipment and tools and things like that I use for my hobbies and side deal things I do. So I'm building me a shop, and so I need to be out there working on that thing. So I may take the whole day off tomorrow and take the 3-day holiday or 4-day weekend, be Friday, Saturday, Sunday, and Monday for me. So if you don't see that mid-morning report, you'll know why. I'll try to do it, but I'm just not sure yet whether I'll get in here in time to do it or not. I may just take that whole day off. So just make sure you make note of that. No chart lessons on Fridays anyway, and there won't be one Monday because Monday's a holiday. And I don't do the mid-morning charts on holidays either. So having got that out of the way, let's get to our chart lesson here. And you can see we turned down today right at this green envelope band. Generally, when you push through the EMA like that, you'll come back and test it. So I was a little surprised we powered up that strongly. So we may come back and test that even if we're going higher, or we could just break lower temporarily and push on up and try to retest this high here. Generally, when you get a break of a channel like this green one, you're going to their prices are going to at least attempt to retest that high. They may not be successful. Most of the time they will. Not always. So we'll see what happens. Wouldn't surprise me at all if we don't pull back here. Tomorrow may be quiet with the 4-day holiday. And generally after Labor Day is when things really pick up again. So we'll see what happens after Labor Day. But here's what we're looking at. Kind of a down day. And on the 2000 tick chart, we just had a sideways range type day that broke lower and ended up closing near its low. We did close outside the range at the end of the day, so it looks like a down day, and it was a down day. But let's flip over there, and you'll see what it looks like on the 2000 tick chart. Okay, here's the big picture look at it, and you can see that we did break out here, failed, came back, and we broke out again, and we ended up closing near our low here. So it did turn out to be a down day, but we spent most of the day just sideways. This is a very mixed trading type day. These days can be hard to trade too. So, but let's zoom in and we'll take a look at the trades and we'll call it a day. Okay, I zoomed in here and 7 o'clock came through this rally up through here. And of course we had this news, couple of high volatility news items right at 7:30 this morning. So you needed to be flat by 7:15 or so. So there's really nothing to trade till that first 30 minutes there until about 7:45. Everything was probably good again, but there's really nothing down through here that I see that I would trade. And of course you get this channel working down, you get a break, new low, then you got one working up, break, move to a new high. I did like this one. You already got some resistance across there. and you got your close outside and two clear legs up, and this actually broke higher and turned down, so you got a nice engulfing bar there. Even if you waited, you could take this one on the close. You wouldn't have to take that on the engulfing. The rest of this is too tight, and there's not really anything. I mean, this is a great signal bar, and it would have worked because you didn't make a new high here, but you just didn't have much room, and so you really need to sit that one out. And of course, you failed out the bottom here, but I think you need a higher low to go long there, and this bar is not good enough. Of course, you run up, and this is your signal bar here, and again your signal bar, this bearish bar doesn't make an equal high. It's not really, it's got a little stem on it. It's a little hard to see there. But we run back down again. I think you need a higher low here that you don't get till you're above the EMA, and you've moved too far there. This channel tight channel runs back up, and it can't even get to the highs, and you get a break, and next thing you know you're working lower, and then you do get a higher low finally here, and this actually breaks lower and turns up. I like going long on the engulfing bar. You could wait for here and go long. You know, it makes it a 15 tick versus 10 or 11 there, because you would have had to break go long right above that, so makes it a little more risky to wait till it closes. And I like that, catching that, because that's a trap right there basically. It comes back. It's tempting to really treat this as a failure. First entry. Actually, the failure's right here, so this isn't even a failure. I looked at that wrong. There's a trend working up here. Well, I don't have it on there. I'm not sure. As you can see right there, I think what it was, that was the retest, so that's the reason I didn't draw that. I just drew it to see the trend. And you get the break, two legs up, it turns down, and then it makes it gets a little fake out right there and turns up. This one's a little bit more risky, but we're not quite back to the highs yet, which is where you would expect we would go here. So what happens, you do have a newer low here. So that's a new low, so you get a first entry and then a second entry that fails. So if it breaks above there, it's a failure. I marked it as green because some of you might have asked about it. It's not really where you're looking for a failure at all, but it probably trapped people right there. And if it breaks higher, we're probably running to the high, and that's exactly what it did. So maybe you take that trade if you want to be a little aggressive. There hasn't been a whole lot to trade so far, so maybe you have to get a little creative if you're a little more experienced. If you're new to, don't worry about failures. Stay away from them. Stick to the basics and let these come to you kind of organically as you watch us talk about them and kind of see them happen in action. They really, people will ask me about them. I don't even really like to talk about them because they're very advanced. There's a reason I don't put them in the manual. There's a reason I don't talk about them often except in the videos, because some people are advanced enough to trade them. So I do talk about them. I do show them. But if you're new to this, if you hadn't been profitable for, I'd say, a couple of years, don't even think about these. And I know that some people just don't want to believe that, don't want to listen to that, but trust me, if you hadn't been profitable for at least a year or two, don't even think about these. And if I hadn't said that lately, I just said it. So anyway, prices run up to the high. We make a lower high here. Prices break higher and turn down. I would, because that's kind of a no body bar and it looks a little congested, I'd wait till this closes before I'd trust this, and then I like going short right there. You don't really get a runner on that one or anything. Runs down again, comes back, get a first entry, comes back, you get a second entry. I marked this second entry with a green because that's a really nice looking second entry with a good signal bar, and you're looking for a new low on this trend channel here. Generally, I don't like an inside bar, but you can see it looks like there might be another trend line working across there. And it's a perfect second entry, other than it just didn't, one more ticket, it makes an equal high, and then you could take it. So, you know, just looking at that the way it looks, it's clearly two legs back to the EMA when you're looking for a continuation down. Maybe you take that. I marked it green. It's aggressive. Don't get me wrong. It's definitely aggressive. But sometimes those are worth taking. So especially on a slow day, when you're expecting prices to go lower. And you can see there is a bigger channel here. This is the bigger khaki channel that keeps going lower here. We come back again, no setup there. Finally, it comes back again, right off that trend line. Another clear second entry with a nice signal bar. Take that trade. Those are gimmies. Comes back again. We don't quite get there. Then there's like 2 legs up, but the signal bar's iffy there. Maybe you take that one. If it wasn't for that range there, I'd say take it. But you can see there's there's some support there. And even though that's a second entry, and we did make a new high, and it is off the key entry point, that one makes me a little nervous. And you see it's not long before we get the break. So it would have worked, but if you just measure it from here to here, which is what you really need to do there because of that support, you only have 5 ticks, and you don't have enough room to get out there. So if you let it break lower and then drop a limit order and got a little tick better, sure, there's enough room, but it could have gone higher right there. So it's just not worth trading. Then there's a little breakout, and because we're in a downtrend headed lower and we don't have a break yet, you can't go long right there. Yeah, it works, but it's not worth taking. And of course, you get a failed breakout up here. It really looks like resistance across there, but it's a little higher. It's a new high, and usually you need to wait on a lower high right there because it could go higher. And that's the thing. And if you draw your channel there, you'll see that it's possible that could go higher. And so I marked it green. Maybe you take that as a failed breakout, but generally you're better off to wait on that lower high. And it comes way down here, and that's moved too far to be a tradable lower high. It needs to be closer up here to this high to be a tradable lower high. So it takes on down, runs on down, then you get a first entry, second entry on the first break of that tight channel there, that cyan. Nice signal bar. Take that one. It's another gimme. Unfortunately, you don't get a runner there again, but you might even trade this as a lower high. I'm a little there's some support there that concerns me, and you've already made a new low here, so I'm not crazy. And that's another inside bar, so it just looks too congested. It's real tempting, but notice too that's the low of the range, and we hadn't had a breakout yet, so you're more looking for a failure here. You can't go long on the failure because it's just congested, so I wouldn't go short there either. It turns out to be a nice move, and it runs down, and we actually make an overshoot of the channel down here, in my opinion, and then get a higher low. So if you want to be aggressive, that's the one to take. There's plenty of room back to the EMA, which is probably your minimum target, but you're probably going to go back to the other side, and you've already had a break and maybe even an overshoot, so you may just take off here. And it does actually take off. It doesn't end up being an extended trend, but that's a great setup there to catch a low and a bottom. That's what you want to see. It's a failed second entry short. Again, that's aggressive. That's very advanced, so anybody new to this, just don't worry about it. But that you catch that and you get a runner, and you can ride that on up. And if you just ride it till you get your lower high or something like that. And usually I'll ride it till you get a break of the trend. Once you get a bar outside, you get a break of it. So that would have got you 7.5 points right there. Maybe at least 7 points. You could have easily got 7 points out of that. And that makes up for a lot of losers. And that changes your math considerably. So at some point you want to trade these runners. And of course we run. Oops, didn't mean to do that. We run down here on this channel, and you get a close outside. It just reverses. You don't even get a. Maybe it's more like this. Maybe I read it wrong. Maybe you do get a break. Maybe it's more like that, and you get a break and a couple of legs down. That's very possible that I just read it wrong. And look where it does bounce right back inside there. But that's like a first, second, third entry. Wait on a higher low, which you don't get. And of course we run up, make a new high. This shows you why you got to be careful and wait on a lower high a lot of times, because if you took that one, I think you would have got burned. It's real close. Yep, see there's only a point there. Now this second one, I'm more tempted to take it because it's a second entry and you're way away from the EMA, and usually you'll get 2 legs up on a new high, and it is right at the midline too. So maybe you take that one. But you see, it gets exactly 6 ticks, which is what you need to get a 4 tick scalp on entering with a sell a sell stop 1 tick below the signal bar. So that's a reason we go for 4 ticks. So all you people that like to change it, and you hear people saying they're having success, maybe they are, but trust me, at some point it's going to burn you. Stick to the rules, follow the strategy the way we teach it. There's a reason we go for 4 ticks. Um, if it's super volatile and your ATR is super high, I don't watch the ATR. You don't see it on my chart up here. I don't watch that. I can see it with my own eyes. If the bars are huge and the thing's super volatile and every bar is 25 and 30 ticks, then yeah, maybe you go for 6 ticks. But even then, I'll just usually go for 4 ticks, and I'll just try to get a runner out of it. And that way I'm guaranteed to get my payday on every trade. All I need is 4 little measly ticks, and I'm going to get my payday. And then a runner's just gravy. And if I'm wrong, I don't lose anything. I don't take a bigger hit. I don't risk anything extra. Once I get my scalp, it's a free trade, and I'm playing with house money. And I like it that way because I'm guaranteed to get paid that way. So anyway, we run up. Really what you do is if you draw generally I don't draw a trend channel on a retest, but maybe this one you do because it's a range day. And you see you get the close outside, 2 legs up, and then it turns down. So that would have been again, it made a new high, so you're better to wait on the lower high, which you never get. The lower high is way down here. It's too far to be tradable. So if you didn't take either one of those, you didn't get a trade. But sometimes because of that midline right there, and now you got 2 legs up and a bigger signal bar, still way away from the EMA, maybe you take that. I made them both green, but we run down here and we run right through the support of the range. But again, it fails, and that's what we kind of expect to happen. Unfortunately, we do get a failure, second entry short here, a failure, but it's on the wrong side of the EMA. It does close right there at it, so if it breaks above, it's probably good. I just don't. It's not perfect, so if you're looking for a reversal, you need a good setup. So I'm hesitant with that one. But anyway, you get your break, you get a first entry, and then you get a second entry, and there's plenty of room back up to this high. It's a little late. I started to make this one green just because how late it is in the day. And if you make a mistake this late in the day, you don't have time to make it up usually. That's the problem. If you make a mistake way over here at 9 or 10 o'clock in the morning, well, you got all this time to make up a mistake. But if you make a mistake here at 2:30, right into going into 3 o'clock, definitely don't trade after 3. I really don't like to trade it. I'd rarely trade it. Normally I'm done by 10 or 11, definitely by lunch every day. I can't remember the last time I traded after lunch unless I had something going that morning and I still wanted to make a little money. I maybe traded the afternoon if there's a really good trade. Not because it's any harder or any different, but just, I like to be done before noon, and then I would do the rest of my work the rest of the day. So anyway, you get a second entry long there, good, decent signal bar. If it breaks above that, it's, most breakouts fail. And of course, you get an easy scalp and you don't get anything more than that. And that takes you into 2:30, and that's the end of the day. So there's some trades. There were some nice second entries with the trend here. It's not a great trading day, but it's not a bad trading day either. So hopefully you made some money today. If not, these are good experience. If you can trade these kind of days when you get a good trend, they're like easy money. So when you learn to trade the range days, and this kind of range day is a little harder. The range days that it's like really, I really love when you get a range day when every time it touches this line it turns down, and every time it touches this line it turns up, and it does it consistently back and forth. Those days are so easy to trade. They're so predictable, but we haven't had many like that lately. So the ranges have been crazy like this right here. So it's just the market goes through phases, and it takes a while to see all the phases. And this phase right now we got is just highly volatile. There's a lot of crazy economic stuff going on right now, and the numbers come out and they look great. Every number they put out seems to look great, but I think if you are smart enough to know, if you look at your wallet, you don't have as much money, your money doesn't go as far lately. It's a lot of smoke and mirrors, so don't believe everything they tell you. The economy, maybe I mean, it's easy to say right now they've created more jobs than ever because everybody was laid off and off work from COVID, so everybody's finally going back to work. Of course, the numbers are going to be higher, and but it doesn't mean that people are financially better off. And I think if you are smart enough to not listen, just don't listen to what they say. Never listen, especially politicians. Never listen to what they say. Look at their results. And if you look at their results, I mean, even his results, he'll tell you he's created all these jobs. Turned the economy around. But I don't see it, honestly. Maybe it's just in my area. I don't know. But everything I go to buy is twice as much now, and your dollar goes half as far. So don't believe everything you hear. The economy is not as rosy as they're making it out to be. And I think at some point we're going to see a big sell-off in this market. I've been expecting it for a while, but we trade what we see, not what we think. I could be 100% wrong. The market can go much higher and be crazy, and people can be wrong for much longer than you can be than you can be right. So never trust what you see. Go with what you think. Always go with what you see. So that's the best rule you can follow. Yeah, at some point maybe the market sells off big, and I'll say, I knew it was coming, but maybe it takes a whole lot longer than I expect. So a lot of times stuff is built in way ahead of time in the markets, and so always be aware of that. Never listen to the news. I mean, I used to get up, if you hadn't heard me say this before, I used to get up every morning at 5 o'clock, and I'd work out, and I'd turn um, the the news on as far as the uh, stocks and bonds. I'd turn it on to CNBC or one of those channels, and trying to get an idea of what was going on with the economy, what's going on in the market, and I'd listen to that news, and they'd tell you that it was going to be a horrible day, and I swear it would rally 1,000 points that day, and then the next day they'd say, well, we're going to get more rally today, and it'd drop 1,000 points or whatever. I'm exaggerating a little bit, but they're never right. They're never ever right, and all they do is they write the news to match whatever the price action does. So don't listen to the news. Just all you got to do is learn how to read this chart and follow the price action, and it makes it so much easier. You don't need to watch any news. You don't have to get up and watch CNBC. I thought that was all necessary. None of that's necessary. The only thing important is learning to read this chart and understand what's going on this chart. If you can do that, you can make money every single day. Not every other day, not once a week, not once a month, every single day. But it takes a little time and a lot of hard work. And I always tell people it's like anybody can pick up a musical instrument, and they can learn to pick a guitar, they can learn to peck around on the piano, and maybe even get pretty good. But how do you get to be good enough to play a piano in a world-class avenue? It takes years of practice, study, and repetition, and even then you may not be good enough. You got to be special. Well, when you go to trade in the ES or any stock or any market, there's professionals that are skilled that have been doing this for years and years. I mean, as an example, I've been doing this for 25 plus years, and I'm not the best trader out there by any means. There's traders much better than me. So that tells you how good you have to be to beat them. This is a zero-sum game. For you to make $1, somebody has to lose $1. So if you want to make $1, you got to outsmart those top traders because they end up with all the money. You'll make a few winning trades here and there, but in the end, they will outsmart you and they'll take your money until you get as good as they are. And then you'll be the guy outsmarting everybody and taking most everybody's money. But you can't get there. Like I said, you can learn to trade just like you can learn to play a piano or learn to pick a guitar or learn to play a flute or whatever your instrument is. You can probably learn to do it. But can you ever How long does it take you to learn, though, to be able to play that instrument professionally and get paid for it and get paid, or especially in a world-class avenue? It takes years and years of practice, repetition, and study. And trading is no different. You're going up against skilled professionals. It takes years to be good enough to see everything and to get the experience. I mean, you can learn the strategy. Some people can learn this strategy in 3 to 6 months, but they don't have the experience at the screen, and they make mistakes and they make errors and they misread things. After your first goal is to be able to look at this chart after the fact and pick out all these trades just like me and mark it up just like me. When you can do that, then you know the strategy. But you still have that next step of you have to get the experience at the screen and outsmarting these guys in real time. And that's what people miss, and that's why this takes so long. This pays better than being a medical doctor. This pays better than being a world-class lawyer. This pays better than any of those, with half the stress and none of the overhead. I mean, all you need is a laptop with a decent screen and good internet, and you can trade from anywhere in the world. You trade from your boat, you can trade from your camper, you can trade from your house, you can trade from your office, you can trade from anywhere in the world, and you don't have any overhead other than whatever that costs you where you're at. And I mean, anything that's that good, that makes that kind of money, is not going to come easy. So don't expect it to. Have realistic expectations of what this takes. And I didn't mean to get on this soapbox today. This thing's almost 30 minutes, but we're going to have a little holiday here, and it's probably time for me to have that conversation without probably having new people in here. So I'm not trying to discourage anybody, because I'm an encourager. This is the best lifestyle you could ever live, but it's not going to come easy. And if you don't listen to me, you're going to blow your account and you're going to be a donor. Don't be a donor, because there's always new donors coming in, and the professionals need the donors. And you don't want to be the donor, so stick to the sim until you prove you can do this, and then start slow in the MES where you can't lose a lot of money. No, you won't get rich trading the MES, but you'd be surprised how fast that account will grow, and you won't lose a lot of money. And you can save your trading capital for when you prove in the MES that you can take money every day. When you start taking money every day, okay, you did it in the MES, you can do it in the ES. Now it's time to jump over there and start taking money every day. And you start small, building leverage. People ask me, why don't you just trade 100 contracts? Take one trade a day. Well, try that. Just try it one time and see the pressure that's on you. And when you got pressure on you, you make mental mistakes and you screw up. I can't do it. I'll tell you right now, I can't trade 100 contracts. I'll get a few trades, but then I'll screw it up and I'll lose my shirt tail. So I don't even try it. I can trade 20 or 25 contracts every day on every trade and make all the money I need to make. You can get rich doing that. No, you won't get rich in a month, but in a few years you can put $1 million in the bank, easy. But you got to get there first. And so don't have unrealistic expectations, because if you do, you're going to fail at this. And most people come into this with unrealistic expectations. They think they can read a manual or read a book, practice for a few weeks or months, and start making money. I hear people all the time, I'm going to supplement my income with a few $100s here and there. That's harder than you think. And if you can make a few $100s every day, you can make thousands every day. Trust me. So it's not easy to do. You got to put in your time. You got to put in the effort. It's as hard as getting a medical degree. It's as hard as getting a legal degree. It takes that much time and effort. You got to put that effort in. And it'll be that costly if you don't listen to me, because you'll be a donor and you'll donate everything you got to it. And you'll end up losing. Don't be a donor. Don't be a donator. That's my favorite line. Don't be a donator. Be a collector. But that takes time, effort, and hard work. Anyway, I'm going to wrap it up. I'm going to keep this under 30 minutes. I got to roll here if I'm going to do that. Again, maybe no chart lesson tomorrow. Or I'm sorry, definitely no chart lesson tomorrow. Maybe no mid-morning report tomorrow. Monday's a holiday. I'll see you again on Tuesday for sure. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.